Professor Ian Goldin from the Oxford Martin School at Oxford University. Welcome to FundForum International.
It's a pleasure to be here.
You're here to talk about long-term investment and sustainability.
Yes, I believe the asset management business is absolutely central to getting longer-term mindsets into financial services. It is about holding, mobilizing people's savings for the long term, their pensions, what they're going to use in later life. And so it's very important that the asset management has a view as to what is going to happen then. What's the world going to look like? How may this affect people's lives? And what can they do as asset managers to better invest for these people's future?
And that's because there's been a trend towards short-termism, if you like.
Yes, there's short-termism in politics. The democracies are more and more short-term. But business also, mark-to-market accounting, quarterly reporting, all of these things are forcing asset managers to make short-term decisions when really they should be making much longer-term ones.
And what could they realistically do, and what influence could they have if they did take on these ideas?
Well, it's a massive industry. Increasingly, it's going to dominate the financial services, and more so. People are going to have to save much more because they're living longer and because the risk-adjusted returns are now lower. So the volume of savings will be greater, and of course, there are new markets. There's 3.5 billion new middle-class people around the world who are also going to save. So the assets under management will grow. It's a tremendously influential group. It doesn't punch at its weight. It punches way below its weight in terms of talking to government, ensuring regulatory reforms happen in a way that will be beneficial to the industry, but also educating the investors, having conversations with the pension funds, with others about how would you like us to invest. You're thinking about the long term. There's some investments they're making which might be very counterproductive. For example, investments which might increase the risks in society, which might undermine the effectiveness of the very things they're trying to do, which is safeguard people's future. There are other areas where I believe they can do much better. So they need to be thought leaders in order to be leaders in their investment, but more important in also trying to educate and bring their shareholders and society with them.
You talked there about much more they can do and being thought leaders. They could significantly invest in infrastructure and things like that could really change the attitude people have towards them as well in terms of social responsibility.
There's this, and I talked about this morning, there's a major mismatch out there. There's a desperate need for investment in infrastructure, not only in advanced economies, but around the world. And you have this mobilization of savings, but a very small share of the savings are going into infrastructure investment. There's a number of reasons for that. They're illiquid investments. The regulators are pushing people more and more short-term. And in fact, a lot of the quarterly reporting and other requirements force people to have liquid investments that can be marked to market. So there's a lot that has to happen, but it's one of the areas where they can do much better. It's also, unfortunately, the case that the asset managers have been pro-cyclical. That means when there's a crisis, they aggravate the crisis rather than being a stabilizing force. Because they're holding long-term money, they shouldn't be going up and down with the roller coaster of the economy in the same way. They should be a stabilizer. They haven't been able to exercise that role, both because of the choices they're making, but also because of the regulations that are enforced on them.
If they were viewed as a stabilizer, it would change their reputation completely.
Absolutely.
As well, wouldn't it?
Yeah, I think they should be thought of as the people that are investing in people's futures, whatever that future may be, a safer, better future for everyone, where they'll have not only the wealth, but the society, the infrastructure, other things they want. But they're not thought of that way, and I think there's a lot that can be done.
Having been involved this morning and talked to people, do you think those ideas are going to realistically start permeating?
The industry needs to, I think, get itself together in a way that some other industries do. Even the hedge fund industry is more organized, I think, than the asset management industry, the banking industry, and many other sectors. It needs to think about these issues, and it needs to put itself out there. I think it tends to be an industry that likes being under the radar. That's fine. You don't get your head chopped off as often. At the same time, you can't change the environment in which you operate, the regulatory environment, the way that people think about you. And there's a lot of pressure. It's very competitive. Everyone wants to be in the top decile, if not the top quartile, every quarter to make sure that they get the investments. And if they're not, people leave them, and that's very worrying. At the same time, I think there's much more that can be done.
In such a competitive environment, do you think it's realistic to think they can be collaborative in that way and move forward as an industry, if you like, in moving in that direction?
Yes, of course. There's many examples of highly competitive industries, not least banking, which are very competitive but do organize themselves to come together on common themes which are beneficial for the industry as a whole and for society. This happens across the board. It happens in the auto industry, in the cement industry, in the telecoms industry, in many mobile phones. All of these fiercely competitive groups come together with common objectives.
Here at FundForum, they like to think they facilitate conversations between people. People take stuff away as well as bringing stuff to the party, if you like. What do you hope to glean here, if you like?
Well, I very much enjoy meeting with all the fund managers, understanding why they do what they do, even if I don't always think it's the right thing. Of course, many of them are friends. I've been working with this industry. I've been a non-executive director in this industry for a long time, so it's a great opportunity to catch up. But there are new ideas, and I think the mood is changing. So it was very interesting on the panel this morning to see that people want to take forward the recommendations of this report I did now for the long term with the Oxford Martin Commission for Future Generations. There's a lot of interest in what I call the butterfly defect. How do you manage systemic risk? So I think there's a growing curiosity. I think there's a determination to do things better, and I hope that translates into actions.
Professor Ian Goldin, thanks so much for joining us.
It's a great pleasure being with you.